You've been watching videos explaining fast red day, fast green day, failed breakouts, but still you are confused. You don't know where to begin. In this video, I am going to explain to you exactly what the failed breakout, fast red day, fast green days are, what traders get most confused about when dealing with these days, and what exactly to look for when you have these signal days. If you're new to the channel, subscribe. Let's do this. Number one is the fast red day. Now, the fast red day is a sell signal for the next day and the next few days. However, how do you identify the fast red day? So, gold has given us a very good example of what a fast red day looks like. So, from the previous week, we see from Monday, Tuesday, Wednesday, Thursday, essentially, we've been on an uptrend. Price has been breaking out of the previous day's high and closing even higher. Breaks out again, closes even higher. However, look at Monday. Monday, rather than breaking out and continuing higher, actually starts reversing and continues lower. So, look at the open, look at the close. This is a fast red day. It means that we have our first red candle of the week. So look at the open, look at the close. If you go to the daily, this is a red candle. And this essentially is a signal that is telling you on Tuesdays that there is a very high probability that price is going to continue going down in that red direction. Number two is the fast green day, which is just the complete opposite of the fast red day. Looking at USD card, you see that the last week we had this day where price was going down explosively. The next day breaks down. The third day breaks down. 3 days of fall. And then on this fourth day on Friday, price actually opens lower and closes higher. So this is an example of a fast green day. Now, a fast green day obviously is a signal that the next few days we might be seeing an uptrend. Now, obviously we see that price has been consolidating, which means we are accumulating volume, and when price breaks out either towards the low or towards the high, there'll be very explosive moves. Now, that covers fast red day, fast green day. Now let's go to my favorite, which I personally use, which is the failed breakout. An example, you can see all these pairs. However, let's use GU. So if we look at GU, we see that on Friday, price gave us a high of the week. So that is the high of the previous week. Today being on Tuesday, Monday broke out and closed back inside of the range of the previous high and low of the week, giving us a failed breakout. So today we are looking for an opportunity to start selling. Another example is last week we had this high of the week set on Tuesday, and then price breaks out on Wednesday and closes back inside of the range, which gives us a failed breakout and a signal to sell the next day and the next few days. And so basically this is what we call signal days. Now let's go to the second part, which is the most complicated and also the simplest. And this is now identifying trades based off of the signal that you are given from the fast red day, fast green day, or even the failed breakout. For example, let's look at DJ30. We have this failed breakout on Wednesday. On Thursday, how do you catch this move? So this is what you are supposed to look at. So we see that we have this pump to the high. So as the market is pumping to the high, you want to identify the natural stopping points. This is where price is bouncing off of a horizontal line. And so this is what it looks like. We can see price here stop. It gave us 1 bounce, 2 bounces. So if you go to maybe the 5 minute, the 3 minute, you'll see that price consolidated here. Also below that, we have this level where price again was consolidating. And our thinking is, if price is reversing, then we want it to start breaking these levels. So if we break below this level, then we have a high probability that price is going to continue in this direction. So what happens? We see that price actually starts breaking down. But if we go to now the lower time frame, the 5 minute, we see that we have this area where price was bouncing off of, and now we just need to wait for price to break below that level. Now, if this is also too much for you, you can do the 3 minute. You can even do the 2 minute or even the 1 minute. So long as you have your major levels. Once price breaks below this level, then you are in. You are in. Then you just wait for price to go back to your take profit. And so the biggest thing here is identifying these key levels. If you can identify them on the 15-minute time frame, this is the best, because now you can start tracking this trade on the 15-minute time frame. If you'd like to work one-on-one with me, check out the link in the description. And if you got value from today's video, subscribe, and I will see you in the next video. Peace out.